Could the next best investment be gold? Could gold be it? Some people say yes, and some people say no. Most of the young people say it is a barbaric relic of the past, because gold's been money for thousands of years. And so far, no fiat currency like the dollar has ever survived. So this is a very interesting question. We're not telling you to buy gold or not buy gold. We're having a very open discussion, pros and cons, disagreements and agreements, as to why gold is good or why gold is bad for you. So stay tuned, because as you know, the world economy is shaking, wobbling, and rocking and rolling right now. How in the world can we have negative interest rates? Does that make sense to you? I mean, why would you pay the bank to keep your savings for you? I mean, we've never been here before, ladies and gentlemen. So this could be the most important show you listen to. We're not saying buy gold or not buy gold. Be really clear on that. We have some extremely knowledgeable guests today, and they're going to be talking about their points of view, and you can make your own choice or decision as to what you should do. Is gold the next best investment for you, or is it not? So with that, we have two very special guests. We have Brian Lundin. He's editor and publisher of Gold Newsletter. He's the host of the New Orleans Investment Conference and the world's oldest, most respected gold investment event in the world. And we also have Jerry Williams. He's been on our program before. He's my go-to guy, because Jerry doesn't just sell me gold and silver. He educates me as to what's going on with the current events in the market. So this is about education on precious metals. And given that the dollar is just printed, we have quantitative easing, of course, which is not printing money. It's quantitative easing. It's not printing money. Okay, so with that said, we all know that our government lies to us. And it's a very important show for you, because this might be the best time of your life. If you get this one right, you might be wealthy. You get this one wrong, well, no difference today. Okay. So, Kim, any comments?
Well, this is going to be a great topic, because, we have our segment at the end of the program called Ask Robert. And gold is we get more questions about gold than any other topic. So it's a hot topic. And, at Rich Dad, we're all about looking at both sides of the coin and three sides of the coin. And we've had Harry Dent on our show, and Harry Dent says gold's going to $250. And we've had Jim Rickards on our show, and Rickard says gold's going to $10,000. So it's up to you to kind of sift through all the information and figure out what's best for you.
So once again, we're not saying to buy gold or not buy gold. We're not telling you to do anything. We're just telling you to keep an open mind and listen to some very knowledgeable people who have been in the gold industry and precious metals for a long time. So first is my old friend Jerry Williams. He's the founder of American Precious Metals. His website is apmaz.com. Welcome to the show, Jerry.
Hey, Jerry.
Thank you, Robert. Nice to be here.
How long have you been in this gold business?
Over 40 years now. I started in 73, 43 years, I guess.
So 73 gold was at what price?
Well, it had just gone from 60 to 120.
Yeah.
Then it dropped back to 90. That was a real education, too, because at the time we all thought it was going to the roof, just like in 2011.
Yeah.
But that's the thing that fools you about this, the volatility, and it's subject to government intervention and
manipulation.
Manipulation, that's a good word for it. That's what it is.
So, Jerry, I'm older than you in this one. I started in 72. So I was in Vietnam watching the price of gold rise, and I said, I better do something. My rich dad wrote me a letter saying, he says, pay attention. This is going to change the world. And what changed the world was Nixon taking the dollar off the gold standard.
Exactly right.
So here we are today, how many years old guys later, so we are battle-scarred and weary of this whole battle, but we come with experience.
So let me just ask a question real quick. When you say Nixon took the dollar off the gold standard, explain what exactly that meant? Because gold at that point...
Dollar, up until that, there was an agreement saying that the dollar had to be backed by 20% gold. So we couldn't print money until we had 20% of gold for it. So we had a dollar with that 20%, we had to have 20 cents in gold. And once Nixon said, you don't have to do that anymore, they could print it. But it's interesting that it changed the world in 1971. So people say, why are we in a crisis today? Well, it started in 71. And I don't think Clinton or my friend Donald can stop this thing. This is out of control right now. And our other guest is a gentleman long respected. I've heard about his New Orleans Investment Conference. and he's very respected and credible in the business. He is a student of this business. His name is Brian London, editor and publisher of Gold Newsletter. So welcome to the program, Brian.
Glad to be here, Robert. You know, it's interesting you mentioning 1971 and Nixon closing the gold window. That was actually the launching point of Gold Newsletter. My mentor in the business, Jim Blanchard, started Gold Newsletter at that very point to advocate for the return of the right of private gold ownership to American citizens. And, you know, a lot of people don't realize it, but back then it was illegal to own gold outside of jewelry or rare coins. I mean, it was as illegal as owning heroin or plutonium or anything else, that the American citizens weren't allowed to even own gold as a monetary instrument. So that was kind of the launching point of Gold Newsletter. And interestingly, that was also the launching point, kind of the starting gun of central bank intervention into the markets. And because at that point central banks were able to print money without any regard for the amount of gold they held in their reserves.
So it's basically, you know, printing money, but although they denied that's what they're doing. Any comments on that, Jerry? I mean, what do you think happened after 1971?
Well, Brian's right about the things that got launched because we didn't have an OPEC before then either. So people who held dollars that they could no longer convert into gold because of that Nixon move had to do something else with their dollars, for one thing. So gold was an option. And because the oil producers were basically getting paid in depreciating currency, well, they got together and decided an oil price that they could control. So we had oil at $2 a barrel in 1971, $40 a barrel in 1980.
Right. In 1974, this guy named Tricky Dick Nixon and Kissinger went over and met with the king of Saudi Arabia. And they said, let's cut a deal. And so since the dollar was no longer attached to gold, then in 74, the dollar became a petrodollar. It was now backed by oil. And and we wonder why we're at war today. You know? That's not an accident. I mean, if you look at the history of the world, this has been brewing for a long time. Any comments?
Well, I had a question for Brian because you said that was the start of the central bank intervention because now they could print money. So at that point in 1971, are you saying then that's when the central banks, that's when the banking became much more influential in our economy?
Absolutely. That's when they started really kind of top-down trying to manage the economy through monetary policy because they then had this new tool. They could create as much money as they would like. And that really is coming to its culmination. We're really reaching the blow-off top of that trend right now because they've manipulated the price of money through interest rates, and they printed money. You know, they started in the 70s by just printing money, and then in the 90s with Greenspan and the like, and they started lowering interest rates to really manage the economy. And now they've driven that idea into the ground like a tomato stake, and they're just doubling down and keep doubling down on those efforts to the point where we have the lowest interest rates in 5,000 years of human history. And negative interest rates are just spreading across the globe like a wildfire.
Doesn't that mean your money is worthless because it has no value?
It's more than worthless. They're charging you rent for your money at the bank. So it's costing you.
Once again,
hold cash.
Robert Kiyosaki, the Rich Dad Radio Show. We're talking to Jerry Williams, founder of American Precious Metals, and Brian London, editor and publisher of Gold Newsletter, and my sweetheart Kim. And we're asking the question, could gold be the most potent or the best investment at this time, or is it just really an insurance policy simply because we're printing so much money? And with negative interest rates, that means savers are losers. So the question is, what do you move your money into? The other thing, too, is those of you who are in the stock market, the question is, with it manipulated by central banks like the Fed, how high can this stock market go? There's another piece of information that says this, is that for the first time, central banks are buying stocks, which keeps the stock market way above reality. In other words, instead of being worth $10, it's worth now $100. So people have this euphoria. Any comments, Jerry?
as far as the manipulation part, well, first off, you mentioned stocks being manipulated. We know that the Japanese just created 1 trillion yen out of nowhere for the express purpose of doing just that, buying stocks and corporate bonds now. And, of course, the euro
to keep their market propped
keep
up.
Keep the markets up, right. Yeah, that's bad publicity, when your populace is scared because markets are crashing, and they have the tools to keep that from happening. So it's not a real market.
It always surprises me that the economy is doing well because the stock market's up. But people are out of work. They're not producing. They're not exporting. They're not importing. But the economy is doing well because the stock market's up.
Well, people instinctively know that's not true, but they don't really quite know what to do.
Right.
Your comments, Brian?
Well, they pumped so much money out there, and they printed so much money, and everybody looks at that and says, well, there's no inflation. And the reason why is that there's no retail price inflation. And as Austrian economists know that retail price inflation is just a symptom of the underlying disease, and that disease being money creation. So we haven't seen retail price inflation, at least in the U.S. yet. But what we have seen is really asset price inflation. All of that currency, all of that liquidity has remained within the bounds of Wall Street, and it's sloshing around the globe like an ocean of liquidity looking for the next market to invest in.
Something that's real. That's real.
Well, right now it's been in equities, and that's why the stock market has been ballooned and has been inflated into a bubble because there's so much of this money ending up in the financial markets. Right. Eventually, that has to go to something real.
So once again, I'm going to give you my pitch. You can listen to the Rich Dad Radio Show, a Rich Dad Radio app, available at the App Store. Listen to your time and your schedule. You can listen to this broadcast again at richdadradio.com. And because you listen to it 2 or 3 times, it'll start to make more sense to you what you should do. What it could be the event you've been waiting for. And also you can discuss it with your friends. It's a very important discussion today. I'll just read this for you. It's from Lord Rothschild, the Rothschild banking family. This is where we are today. This is the greatest experiment in monetary policy in the history of the world. In other words, we're sitting on the edge of the cliff. And this is why I'm saying it could be the best of times for you or the worst of times. But I would say this, if you're saving money, you're being screwed. That's what's happening right now. If you're buying all the old advice of invest for the long term and save your money, you're a loser today because they're printing it. Interest rates are negative interest rates. It means they want to charge you money to hold your stupid savings. That's how worthless money has become. And that's why Rich Dad always said savers are losers. And that's why the opening lesson number 1 in Rich Dad, Poor Dad is the rich do not work for money because cash is trash. Even Buffett said in 2010, get out of cash because he saw them going to start printing money and juice the stock market. But the question is today, how much higher can that stock market go? So you could run into the stock market, and that might work. And it's not a bad bet, but you definitely don't want to hold cash today, at least not in the last 2 or 3 years, because I don't know what's going to happen. So our guests today are Brian Lundeen, editor and publisher of Gold Newsletter. He's the host of the New Orleans Investment Conference, the world's oldest and most respected gold investment event, and I'd agree with that. And our friend Jerry Williams, he's the founder of American Precious Metals. We've done a lot of business with him, but again, I don't buy from Jerry for gold. I buy from Jerry for information, wisdom. I think I've been in gold longer than Jerry has by 1 year, 1972 to 1973. So we've been in the ups and downs with the old guys of it. And my sweetheart, Kim. Any comments, Kim?
Well, yeah, I'd like to start with a discussion with Brian and with Jerry, and I'll start with Jerry. But because you're talking about they're printing all this money and the negative interest rates, the currency markets are manipulated, the stock market is manipulated, and we said earlier the gold market is manipulated. So why is gold so much better if everything's being manipulated?
Well, of course, these other markets you mentioned besides gold are paper. Some they're not even paper. They're electronic blips on a screen. Then you get a statement. So you can't even get a stock certificate anymore.
It's worse than your brother-in-law's advice.
But the gold is real. You put it in your hand. It's obviously a lot of work to get it out of the ground and mint it and so on. And the price fluctuates, but I would advise anybody buying gold not to be so price conscious, except maybe buy it as cheap as you can whenever it's down, if it's just come down like it has from 1380 in June to 1325 today, that's a pretty good time to buy it if you're waiting for an opportunity.
If you're long on it.
But to think that it would go to 250, as your previous guest had announced, is
That's Harry Dent.
Right.
He's a famous guy. He wrote The Great Boom Ahead.
That's a 36,000 Dow, was it?
Yeah. He hasn't been right, but anyway, it's good. He's
to
right
wait
some of the time.
Even at 1050, let's just say 1050 an ounce, which is where we bottomed out, by the way, after a 5-year bear market. $1,050. That was in December of this last year. As I said, we're now at 1325. That's 30% higher than it was in December. Dealing with the retail public all these years, I can tell you nobody bought at 1050. I did have a seller who sold me 500 ounces at 1050 at the end of the year. Took a huge tax loss.
Wow.
His last comment as he went out the door was, if it gets to 700, I'll buy it all back. Well, I don't think that's going to happen, nor do I think 250 will happen, because the demand now is worldwide, and the inflation is worldwide. That's the reason you get out of money, because every country is now trying to outdo each other to see who can devalue the most.
So the question here is, how is it manipulated?
Well, it's done. It's easy to think that maybe the government doesn't like gold, so they want you to stay in their treasuries or whatever. But it's more than that. It's the money center banks, the people whose names you love to hate, like Goldman Sachs and J.P. Morgan and so on. They have trading departments. And by the way, all these outfits are under investigation for various manipulations of interest rates, currencies, and metals.
Right.
So, they'll find some poor guy, some rogue trader, and throw him in jail for a couple of years. And they'll pay $1 billion fine, and that's the end of it. You never really get to the bottom of why.
So, Brian, how is the gold market or gold price manipulated?
It's just what Jerry was saying. These big traders, they trade paper gold, on these future exchanges. They have really no relation to the physical gold market. And if they did have any relation to the physical gold market, the price would be much higher, because what they're doing is by selling gold, paper gold, they can create as much so-called gold as they like. They can create this paper gold at will with just a few keystrokes.
And when you say paper gold, are you talking about ETFs, exchange-traded funds? What are you talking about?
No, those are at least supposedly have a connection to real gold in a vault. But this paper gold, that's just, on the commodity and futures exchanges. It's just like buying pork bellies, except you're buying or selling, gold contracts that are supposedly redeemable in gold, but never actually do get redeemed in gold.
Yeah, there's no association or contact with gold in that whole thing.
No, they can create as much gold as they want with a few keystrokes, as long as they can sell it until they find a buyer. And what they're selling is just a piece of paper that supposedly represents the actual metal, but never doesn't have any real connection. And what's happened is that they've artificially driven the price lower than it should be, and Asian savers and investors are buying it hand over fist. This has been going on for the last few years, and they are between China and India. They're actually buying more gold every year than is mined by a large extent. So what's happening is all of these Western vaults are being emptied by this demand from Asia.
I also heard that Canada, which is North America's largest gold producer, their treasury has no gold in it.
That's true.
I mean, we're sitting on
They've
paper.
sold it all.
Yeah, we're just sitting on paper right now. One last question, because we're on paper. The hard asset guys like myself, Jerry, and Brian, what do you guys think of ETFs? Aren't they kind of a Ponzi scheme also?
Well, that's it. That you would say that if you didn't think that the gold was actually there. But what we found out back in 2010 and 11 is when things started to fall apart. All that gold that was backing these ETFs, all that physically got sold. The exchange actually had it. And we were kind of suspicious that they didn't. But that's one of the reasons the price went down.
So the gold that was backed by the ETFs is sold?
Right.
So it's not there?
That's why the price went down. That's why the price of the ETF.
So if I hold as an investor, if I hold an ETF today, is that backed by? Is there gold there?
Yes,
no, not really.
It is. Well, there's physical gold to back those shares,
but you still get paid in dollars. You don't get paid in gold.
Well, no, you can't. You can't take delivery of that gold either.
No,
you
so
have to trade
not
the paper.
easily, at least.
So, Brian, do you agree with that? Is that how much backing does a gold ETF have with real gold?
Well, supposedly it's backed one for one with just some management fees, et cetera, attached to it. It's really a vehicle for trading gold if you're going to trade gold. But the primary purpose Paper, yes. It makes it very easy. You can do it on your computer and never have to go to a coin shop or ship your gold or anything like that. But the real reason to own gold, the real reason why investors and savers need to at least have some physical gold is as insurance against the government really screwing up with the currency and devaluing the currency.
And I agree wholeheartedly with that. Kim and I don't look at gold and silver as investments. We look at it as insurance against our governments and against the futures trading floors of our large banks.
It's interesting because, people talk about gold isn't a great investment because there's no cash flow and the stock market's gone up higher, than all this stuff. But again, as you said, we're not talking about gold as an investment. Exactly what you're saying, Brian. We're talking about it as a hedge.
Although,
and it's not all of your money either. It's just a portion of your savings,
right.
A portion of your wealth that's put aside that will survive and protect you in the event of financial catastrophe or even just the slow but steady deterioration of the currency.
Once again, it's Robert Kiyosaki, the Rich Dad Radio Show. Our guests today are Brian Lundin, editor and publisher of Gold Newsletter. He's also host of the New Orleans Investment Conference, the world's oldest and most respected gold investment event. Also, Jerry Williams, he's our friend, founder of American Precious Metals. His website is apmaz.com. Any other comments there, Jerry? I mean, what would a person be cautious about today, given the uncertainty in the market?
Well, the first thing to be cautious about is wherever you buy, whether it's best to buy where you can pay your money and walk out with it.
Well, that's a good point because a lot of people, there's a lot of online people selling gold. How do you know what's reputable and what's not?
Oh, I hate to disclose this being in the business, but the Chinese are getting awfully good at counterfeiting not only raw coins, but the coins that are in holders. They fake those as well. So
how do you find a reputable dealer?
Well,
like
somebody
yourself?
that's in a numismatic directory, perhaps. Those kinds of people have never been indicted for anything, so they have no criminal record or anything. But we have a very expensive machine that tests every ounce that goes through our place, and we had somebody in recently with 6 very credible-looking Perth Mint gold bars, which wouldn't register on the machine. So I don't know what they were, but they weren't gold. But boy, they were good.
So you've got to find a reputable precious metals dealer, ideally.
Right. Yeah.
Okay.
If you can buy by mail, you're kind of taking your choices. But it needs to be somebody reputable, not somebody just been in business for a couple of years.
Any comments, Brian?
Good point.
Yeah, and if you look at if you buy by someone who's advertising on television at ultra low bullion prices, you're going to get your bullion probably at a decent price, but you will have to suffer through a really hard, high pressure sales pitches.
That never ends.
Yeah, absolutely. So that's where the real cost comes in.
And what they're going to sell you is numismatic coins, right?
They'll try to. Right. You'll call in and ask for bars or grigorans, and
being collectible coins,
rare
right?
Coins.
And when you're talking about buying gold, you're talking about buying American Eagles,
yes,
Canadian maple leafs, just 1 ounce gold coin,
right?
Not a collectible.
Low premium.
Any comments on that, Brian?
Yeah, the collectible market is an entirely different market, and I won't disparage it. There are a lot of people like that, but you have to like it. You have to get involved. You have to educate yourself, and it's a hobby that can be profitable if you learn the ins and outs of the market.
We asked the question, Harry Dent says gold is going to go $250 an ounce. And then we have James Rickards, another very smart guy, who says gold is going to go to $10,000 an ounce. So we're discussing why, not so much what the price will be, but why? What's going on underneath all of these predictions and moving and shaking in the world economy? And I'd like to read once again from Lord Rothschild of the global banking family, the Rothschild Bank. This is the greatest experiment in monetary policy in the history of the world. In the history of the world, sports fans. In the history of the world. And you're sitting here right now going, ¿Qué pasa? What are we doing, And so the reason we have 2 great guests, Brian Lundin, editor and publisher of Gold Newsletter, host of the New Orleans Investment Conference, the world's oldest and most respected gold investment event, and Jerry Williams, founder of American Precious Metals. And we're the old guys in this business. We've seen the ups and downs, the predictions and all that. And basically there was 2 camps. There's the paper guys. They believe that you can print paper. A paper is basically a promise, an IOU. If you trust that stuff, knock yourself out. And there's guys like Kim and I and Jerry and Brian. We don't trust an IOU, a piece of paper. So those are the two basic camps and all this. So it's a very important discussion today is could gold be not only save you from if, let's say, the currency crashes, because all fiat currencies have crashed so far. None has ever survived. The dollar is a fiat currency, basically like an IOU from the government. Or could gold be the biggest dud of all? So don't say I told you to buy gold or not buy gold. I'm just telling you, listen to the underlying discussion between Brian, Jerry, Kim, and Mike. Comments, Kim?
Well, that's what I like to get into with Jerry and with Brian is what do you think is going to happen with the price of gold? I'm reading these articles just today, and they're talking about, well, our predictions, and these are these gold, quote, experts, our prediction is that in 2017, gold's going to go to 1,500. I'm like, that's not much of a prediction.
She's Superman.
Yeah, even I could figure that out at some point.
Yeah, that's pretty easy. But as I mentioned before,
Jerry?
since December now, we've had a 30% increase. That's almost a detriment to the public who hasn't gotten in yet because they don't want to catch a falling knife. You know, if I buy it at $1,300 and it drops to $1,000, oh, what have I done? You might want, of course, that's from the investment standpoint. Obviously, if we think maybe 10% is a modest place to start for insurance purposes, insurance you hope you never have to cash in, like collapse of the banking system, and what are you going to use for trading? So put those gold coins away in a safe place and hope that you don't have to spend them.
So it's insurance, not investment.
Insurance, exactly right. Mm-hmm. Now, if you're an investor and you've looked at it and you say, well, it's up 30%, and today it's $1,325, and 2 months ago it was $1,380. Well, if it goes down under $1,300, that would be a pretty good place to start if you haven't got any, or add on if you already do. Having said that, Richard Russell, who we often quote here, who's not with us anymore, his favorite phrase, and I love this, if you're not sweating, you have it invested properly. So buy it when you feel uncomfortable. First off, you have to have the faith in what you're doing. And like I say, if it goes down 10, 15%, maybe you've guessed wrong, and if you've invested and you're in too heavy, take that first loss. That's always your best loss.
Anyway, Brian, what do you think? What's going on?
Well, I think that you put it well. You know, you said even the U.S. dollar is at risk. You know, people look at all these hyperinflation and they look at the purchasing power of all these currencies falling, and they say, well, it could never happen to us. It could never happen here in the U.S. But the fact of the matter is, when they took silver out of U.S. coins in 1965, that's another starting gun, as it were, for devaluation of the currency. Since that point in time, which is in all of our lifetimes, the dollar's lost 87% of its purchasing power, and that's by the government's own measures. So, you know, it's already happened here, and it is inevitable. The only question is how quickly. And owning precious metals protects you from this inevitable destruction or inevitable devaluation of a currency.
Of paper.
Of paper.
It's a promise. It's an IOU. It's a contract.
Mm-hmm.
It says, we will give you, if the dollar falls, we'll give you $1 back. I mean, what a promise that is. I mean, I can't believe that thing. So Brian, quick thing. Can you give us an idea what the New Orleans Investment Conference is and why people should go to it?
Yeah, absolutely. You know, I mentioned that the guy who started my whole business, Jim Blanchard, started Gold Newsletter in 1971 when Nixon stopped exchanging dollars for gold. Well, he was actually successful in getting gold legalized by 1974, and he decided to have a conference that would teach investors, U.S. investors, how to buy gold. And it started off small, and it got very big, and it's been going on ever since. And we've had really giants of history from Lady Margaret Thatcher, Ayn Rand, Milton Friedman, Barry Goldwater, Alan Greenspan. You know, they've all been at our conference, and we've attracted them all to our stage. And it's grown to become the one place where all of the best experts in not only economics and geopolitics, which affect all markets, but also in specifically gold, silver, and mining stocks. It's where everybody comes together to find the best opportunities.
And what are the dates, Brian?
The dates are October 26th to the 29th.
So again, just as Rich Dad, we're not endorsing this conference. What we do is we offer different resources, educational resources, and this is one resource that you might want to check out.
So how can the people register for your conference?
goldnewsletter.com. Now, we also, and or NewOrleansConference.com, but we have a special offer for Rich Dad listeners, and they can go to goldnewsletter.com/richdad and get a page with special offers, including a half-price offer for Gold Newsletter itself.
Excellent.
That's a great deal.
Excellent.
Great deal.
So I have a question. Okay. We talked about, we all talked about earlier about gold being illegal here and now. Then it became legal and you couldn't own it. Why today, I'll start with Jerry, why today is China encouraging all of its citizens to buy gold where U.S. Western, not so much?
Well, it does keep it within their country. As far as I know, Chinese.
And why would they do that? Why do they want that?
Well, I think ultimately, and like Brian said, they think long term, they're going to wind up with a gold-backed currency, the yuan. I mean, they keep devaluing it, and Trump is complaining about that. But they think long term. They're now members of the IMF, the International Monetary Fund,
which is a first.
A first. That's very significant. And I think that they have their sights on being the new world's reserve currency, replacing the dollar.
Well, the Chinese were the first guys to use paper money back in 694, the Tang Dynasty. So they know how bad paper is. They've been doing it for a long time. But the other thing is a golden rule, is he who has the gold makes the rules. And ladies and gentlemen, China will make the rules in a few years.
So, Brian, another question. If the stock market crashes, we know there's a lot of manipulation that goes on. If the stock market crashes, how is gold impacted?
Well, if there's a liquidity crunch, in other words, if the stock market crashes and all of these people who have bought stocks on margin all of a sudden have to raise money, then gold will suffer in the short term. Your guest Harry Dent said that gold underperformed in the 2008 crash. It dropped by 30%. Well, that's true. It dropped as 30% as people cashed in their gold to raise cash to settle their debts in their brokerage accounts. Mm-hmm. But what he didn't say was that after that, gold more than doubled. In fact, it nearly tripled in price over the next few years as all of these central banks and the Federal Reserve leading the way just kept pumping out all of this money to rescue the banking system. But the lesson is that gold was the piggy bank that was broken open in a time of distress. When people needed money, gold was there.
So once again, you guys, crystal ball time. What do you think? What do you think gold's going to hit? Dent says 250 and Rickard says 10,000.
Well, I would put my reputation on the line saying it's not going back under 1,200, period.
Brian, what do you think?
I think Jerry is absolutely right. And one of the things I'm pointing out to people is that, the Federal Reserve, if it has to resort to lowering interest rates or returning to quantitative easing, you'll add a couple $100 to the gold price in a flash. And We're really on a razor's edge here. We've had a couple of quarters of really stagnant GDP numbers, and the only thing that's supporting the U.S. economy right now is consumer buying, and that's being driven by low energy prices, low gas prices. So any of these things could turn around in a flash. And if they do, if the Federal Reserve is forced to join all the other central banks in the world and start easing again, then gold is absolutely going to just rocket up from there. So I think that's a very possible wild card for gold. But other than that, I agree with Jerry. I think, we have to get over 1,400, and after that, 15 and 16 become very much in reach. And I think it'll happen at some point over the next year.
So let me ask this question right now. You have one tip. What would you, all the years of your, being in this business, what would you say to most people? What a starter, like somebody just starting out?
Well, a couple of things concerning banks. Not that all banks are bad, but I would stay out of them as much as possible, particularly safe deposit boxes. And I would get
deposit boxes. Why?
I would not store them there because I've just read some fine print from a big bank where I had a box, and they want me to renew it. And in there is a 5-page agreement where you agree not to hold precious metals in your box.
Really?
If for any reason, bank holiday, earthquake, whatever, they open that box and you've violated your signed agreement, they have the right to take it.
So don't keep it in a safety deposit box.
That's just the main thing. There were
bank.
several other things in there I didn't like, too. It's not insured, of course, but no precious metals, no cash. So I would get some cash out of the bank.
Well,
nothing wrong with having a couple $1,000s in 20s in a safe place just in case the ATMs don't work. And as far as, I would definitely not put my gold in the bank, and I would have some gold. Everybody ought to have some.
And
to
silver.
the point,
And silver.
And silver, yes, by the way, to the point where you sleep nights.
Yeah. Brian, tip for the listeners.
Well, those are great tips by Jerry. And one of the things I would say is don't try to time the market, at least to build up your initial core holding of precious metals. Just put a little away every month and put it into gold and silver. And when the price drops, you're going to buy more for that same amount of money. So it's a way to dollar cost average is what they call it, and you're always going to be in the market, you're going to be buying, and you're really impervious to the ebbs and flows of the price.
Good point.
Well, my point, and Kim and I have this follows, we don't follow the price. We count ounces. How many ounces have we acquired physically? We have a few ETFs, but we like physical, and it's kept in a place that Jerry recommended to us, away from the banks, away from our houses, away someplace that we can get to if we have to get there. So we don't count, dollars per ounce. We count number of ounces.
And we haven't talked about silver at all, but silver is kind of along the same lines as gold. I mean, we buy a lot of silver from Jerry, and Brian, you recommend silver also?
Yeah, silver is moves more than gold on the upside and more on the downside. So it's kind of supercharged gold. And if you like gold, if you feel that gold is going to rise, then you really need to own silver.
Once again, it's Robert Kiyosaki of the Rich Dad Radio Show. I want to thank Brian Lundin, editor and publisher of Gold Newsletter. His website is goldnewsletter.com. If you listen to this presentation 2 or 3 more times, you'll be an expert on gold and silver right now. And one of the most best investments you can make. Also, have your friends listen to it so you can discuss it. Very important thing to do, especially at this time. Given what Lord Rothschild, the Rothschild Bank, says, this is the greatest experiment in monetary policy in the history of the world. You get this one right, you might make it big time. Get it wrong, well, nothing has changed. I want to thank Brian Lundin, editor and publisher of Gold Newsletter. His website is goldnewsletter.com. You can hear about the New Orleans Investment Conference, October 26th to 29th. Jerry Williams, founder of American Precious Metals, website apmaz.com. Jerry is my go-to guy when I need to have information about gold, because Jerry and I are the old guys in this business. Any comments, Kim?
All I know is every time we do a show on gold and every time I talk to Jerry and Brian, I always want to go out and buy more gold. That's all I want to say at this point. So we're now going into Ask Robert, and you can submit your questions to AskRobert@richdadradio.com. We really appreciate all the questions from all over the world. So, Melissa, what is our first question?
Our first question today comes from Eric in Brea, California. Favorite book, Cash Flow Quadrant. It says, Robert, I've been starting to buy silver, but I cannot afford to buy large quantities. I noticed that the online store I shop at has copper. Copper is much cheaper, and I can buy larger quantities. Is copper as valuable as silver or gold in terms of insurance against a currency crash?
That's a very good question. First of all, copper is a base metal, and silver and gold are precious metals, so there's a very big difference. Silver is also an industrial metal. It means it's used in industry for water purification and a lot of things. It's always consumed. So I like silver personally because it's consumed where gold is stored. But copper is a base metal, so when you look, when they say debasing your currency, that means they took silver or gold, they put copper or tin or lead into it. So that's how they do things. So the answer is no. There's too much copper in the world. When the world economy slows, copper piles up all over the place. So the run for copper is over right now. Any comments, Jerry?
So, Jerry, thanks for staying by and answering the questions. Jerry Williams is the founder of American Precious Metals.
You bet. Always glad to be with you guys.
What do you think of copper?
The copper peaked at about $4.25 a pound. So you have to have a warehouse to store it. It's now around $2 a pound. And, in fact, the government took copper out of the penny way back in 1982. But Robert's right. The current coins that we have, they're copper nickel. And so they cost like 3 cents to make a quarter. And, that's the new coins that we have, copper, nickel, and manganese. It's a base metal
versus a precious metal.
That's correct, yeah.
Very big
so
difference.
you wouldn't.
Prospects for copper, I don't think are that good. The economy comes roaring back. The usage is for silver, as he points out, over 100 different industries. Copper, homes, cars,
electrical wiring,
homes and cars. That's the big deal. And
so if the economy goes down, the price of copper keeps going down. Other thing too is copper is recyclable. So it's called above ground mining. So they go into the junkyards and they pull all the copper out. It's not precious. That's the big thing. There's plenty of it.
Right.
So I wouldn't do it. Next question, Melissa.
Our next question comes from Brendan in Australia. Favorite book, Rich Dad, Poor Dad. Says, do you see the formal acceptance of China into the IMF special drawing rights basket of currencies accelerating the decline of the U.S. dollar is the best way to protect your wealth through gold and precious metals?
My opinion, it is, but it's a very sophisticated question that you can't just say yes or no to, right, Jerry?
Can you explain first what special drawing rights are?
Oh, SDR, it means...
Basically, it's a creation of the International Monetary Fund, and the question that, China being admitted into the International Monetary Fund is huge.
Why?
It just tells you that they're a major
have gold.
player now, and they're challenging the United States in terms of financial power.
What Rickert said about the special drawing rights is they're trying to go to a one world currency.
Exactly, that's what it is. And it only trades. It does exist. It's been out there for 30 years, but it's only traded between countries. People don't. You can't just buy one anywhere. There's no exchange for them or anything. But they do have a gold backing, and I think that China being involved because they have probably more gold than any other country. They just don't admit it. But when you look at the numbers, they're the world's largest producer and the world's largest importer of gold. Most people don't know that, but they don't tell you about it. So they're very secretive about their military buildup, about their financial situation, and I think that they're going to be a major player, and eventually their goal is to be a world reserve currency, replacing the dollar.
So you think that the yuan, and we talked about this, and so listen to this podcast again and listen to the show again, because we talked about that the yuan could be the new reserve,
the world's
currency,
reserve currency,
and backed by gold.
Yes, definitely. Who would trust it if it wasn't?
So once again, this is the most important time to be alive right now. What James Rickards of Currency Wars is predicting is that they're going to sit down at the table one more time. It's going to be like a poker table. And instead of having paper, they're going to have gold stack up. So China will be on one side, Russia, U.S., Europe, and all that, Japan. They'll sit there. And he who has the gold makes the rules. And I think that's what China's angling for right now.
Yes.
India also. You should agree with
to
that?
a lesser point, yes.
Yeah. So that's why if you want to be, cover your bases. 2/3
of the world's population is gold-oriented.
Yeah.
We tend to think in terms of, we're the U.S. is the center of everything. No.
So I
financial
know
markets,
this is down the road, but let's say the yuan becomes the world currency. What does that do to my ounce of gold that I own?
Well, it would probably make your ounce of gold go up, but it would make the dollar lose purchasing power.
But
that's what Rick is calling for.
Which means that, gold's going to go up in terms of dollars. It may not go up in terms of yuan, but, in terms of dollars, we've already seen it. As you pointed out, 20 years, the dollar's lost 85% of its purchasing power. That's just within our very short lifetimes,
Yeah. Next question, Melissa.
Our next question comes from Ron in California. Favorite book, Midas Touch. His question is this: is it better to buy gold or silver coins for investment?
Again, I wouldn't buy it for investment right now. I would just buy it by the ounce. And what Kim and I did when we first started out, we didn't have much money. We bought a lot of ounces of silver, right, Kim?
Yes, we did. We had like silver bars, and we had no place. We didn't know where to put them. We didn't have any money to go buy a safe at the time, so we just stacked them in our closet in our bedroom.
I think the question may allude to what would you use in terms of purchasing if the whole thing crashed. You wouldn't want to have just 1 ounce gold coins, which might not be able to get change if you had a transaction for a tank of gas or something. Whereas if you had some of the old silver coins or even the new issue silver coins with the $1 face value, but particularly the old ones, so the dimes and quarters and halves, this would be something that everyone recognizes it's going to be worth whatever the silver content is, but maybe more than that because they don't make them anymore.
Yeah.
And
the
price
it's
is up.
interesting. When you say that, as a kid, I remember I kept my silver dimes. I don't know why did I do. I don't know why I did that, but I'm like,
instinctively you knew.
Yeah, I'm like 10 years old, and I'm like, that one has that's all silver. I'm going to keep that. I still have them. Today.
Well, silver's right around $19 an ounce now, down from $21 2 months ago, but up from $13.60 at the end of last year. $13.60 an ounce.
Try $1.30 when I was buying it.
Yeah, those silver coins are worth about 15 times their face value. $1.50 for a dime, and so on.
So how does American Precious Metals sell old coins? By the bag or by the pound or the ounce?
If you just come in with you wanted $100 face value for $1,500 roughly, we would do that. But it's usually priced in terms of $1,000 face value bags, which would be $15,000 to buy one.
So,
but we'll break it down.
So this is like a
halves.
bag of old coins.
Right. Dimes, quarters, or halves. We break it down to whatever your budget is.
So your response to Ron, should I buy gold or silver, you would say buy both?
I'd say buy both. Maybe 2/3 gold, 1/3 silver, at least, something like that.
Next question, Melissa.
Our next question comes from Juan in Las Vegas. Favorite book, Rich Dad, Poor Dad. Is gold the new money?
Well, at Rich Dad, we don't say gold is new money. We say knowledge is the new money. Knowledge is the new money. And that's why Rich Dad was founded nearly 28 years ago, is because if cash is trash, remember, rule number 1 in Rich Dad, Poor Dad is the rich do not work for money, because after 1971, money stopped being money. So it is knowledge that's going to make you rich or poor, not money.
Ray Dalio, who's a manager of a large hedge fund called Bridgewater, pretty well known. I love this quote from him. He says, "Those who don't own gold know neither history nor economics." Isn't that great?
I like that. I like that. And that's why, Jerry, we have you on the program. That's why we've had Brian on the program. You've been doing this since the 70s. You're a wealth of information. You've seen the ups and downs. Our job is to bring our listeners the best resources possible, and you are definitely that when it comes to gold and silver.
Oh, thank you. It's always a pleasure to be here.
And to think for yourself, because, we have Harry Dent, who's on one side, and you have James Ricketts on the other side, 250 to 10,000, and somewhere in between there is reality.
Well, I can understand Ricketts' projection, because you just take the outstanding trillions of dollars worth of currency and divide by the 257 million ounces of gold we supposedly have, and you'll get $10,000 an ounce.
What do you think of Harry Dent's 250?
Well, Harry Dent, he's taken us back to 1978 gold. Well, how's that happen? And what's the rationale for that? A total deflationary collapse? Is oil going back to $2 a barrel? Is gas going back to 30 cents a gallon? Well, a dime for a gallon of milk? I don't see that. I just don't see how he can arrive at that logically. It does probably sell newsletters, though, to be that outrageous.
It's true. We're talking about it.
It does.
Nobody's talking about
great
us.
conversation.
They're talking about Harry Dent. So once again, I want to thank all of you for listening. I want to thank Brian Lundin, editor of Gold Newsletter, and also Jerry Williams,